TheoTRADE. This is Don Kaufman. It's June 21st, 2024. Just about 30 minutes to go to the cash close here on this Friday afternoon. Before I get too deep into this weekend's update, we have really the bundle to kind of end all bundles here, the Technical Analysis MBA Pro bundle. I explain all of the details here on this video, but it includes an entire multi-year archive, hundreds of technical analysis videos across 11 different categories. There are 38 masterclasses, 7 watch lists, 2 studies, and 38 scans. It is absolutely packed. Check it out. TheoTRADE.com/T as in Tom, A as in Apple. Again, it's TheoTRADE.com/TA. All right, let's get to that weekend update. To the charts and trades we go. The $5.5 trillion option expiration. Well, this could change everything for the marketplace. Let's start in the most likely of subject matters, the SPX. So the SPX, throughout the course of this holiday trading week. Remember, we were closed, of course, on Wednesday, 4-day trading week. Well, we hit every ounce of what was a $65 expected move, a little bit of a pullback. We're going to finish the week what is mildly higher. But immediately, you're looking at the week and you're like, well, the markets, they're still holding it together right now, and they absolutely are. But the first thing that I want to elaborate upon, of course, is that, yeah, you do have approximately 5.5 trillion, okay, in options that are coming off the books. And that's just, it is massive positions coming off. Allow me to explain in a bit more detail here. So I'm going to start in the SPX, and no, not on the chart. We're actually going to go directly here, okay, into the option chain. And when I say that, oh, stuff's coming off the books, what am I really referencing? Okay, and the answer to that is the open interest. Now, open interest on calls, of course, open interest on our puts. So what you're looking at right here, right now, this is the SPX. And you look in here, there's like, there's 1,000 here, there's 1,000 here, there's 1,000, a couple thousand here and there. It's not too big. Yeah, but one of the points that's missed is that the SPX actually had an AM settlement this morning, and there was huge size coming off, just huge size coming off. And one of the things that people often discuss, and these terms are thrown around all the time, it's a triple witching, it's a quadruple witching. Okay, like what does it really mean? And here's, again, the kind of the truth behind the whole triple witching idea. And triple witching just basically means, look, the futures contracts, the index futures, they expire, they roll over. And that happened this morning, whatever. That's not that big of a deal, okay? Some of the big deal, though, comes like SPX. When I start talking about like SPX, and I call it the mother of all products, if we look into Think Back, and I'm going to show you why this is so important. If we look into Think Back, okay, and I'm going to open up the AM settlement now, all right, AM settlement. You're like, well, what's the difference between AM and PM and settlement, all right? And one of the primary differences, this AM settlement for June, if I start opening up in just a few more strikes and I pull up volume and open interest, okay, you're going to see some pretty huge amounts of open interest, stuff that you didn't see in that PM settlement, 20, 30, 40, even 100,000 contracts. I'm only opening up 14 strikes. I start to open up all strikes. You start to scroll through here and you wonder, like, how could you possibly, okay, come up with $5.5 trillion in an OpX, okay? And the truth be told, like, look, these options, that's the June 21st for 24. The AM settlement, it's been around for a very long time. If I actually go to a live option chain, which I am right now, I just want to make a quick point as I scroll out in the option chain. June of next year, okay, it's already available. I mean, you got June, when I say of next year, like literally the AM settlements, okay, for what? For years into the future, they're already accumulating open interest. So you get this tremendous option expiration, of course, on the AM settlement. And you go, well, you know what? the AM settlement, it happened, and it did happen. And I got to tell you, the moment that all of those SPX options kind of get lifted off, there are hedges, okay, that are left on in the ES, and they have to exit the hedges. And you can actually see what was just tremendous volume in just like literally the first minute, okay? It didn't necessarily, though, have the wild volatility impact I think a lot of people would have anticipated. Bottom line is, look, this stuff is traded via algorithms. But I am going to say this, okay? A lot of that 5.5 trillion, yeah, some of it was definitely involved. Some of it was definitely involved inside of the SPX. You know where there's also a huge amount? Inside the equities. And we start talking about triple witching, okay? Don't forget, it's the futures contracts that roll over. It's the index like SPX, okay? The AM settlement. Last but not least, the equity products. And I come to Nvidia. So what? Nvidia's down a little bit this week, okay? Yada, yada, yada. But here's actually the crazy part. When I started looking at Nvidia and I started getting a little bit more in depth and I opened up to June, okay, 21. Forget about volume. Volume is just, people are scalping gamma today. There is huge open interest inside of Nvidia. And one of the reasons there's such huge open interest is this is some of the impact from that 10-for-1 stock split. Okay, this could have a broader impact on markets. There's no question about it. So if I start to highlight like open interest, okay, start to recognize, don't worry, there's only 125,000 contracts there. Okay, we're talking, 105 there. This is all, okay, huge amounts of risk. And this risk is literally coming off the books. So we talk about, 5.5 trillion. And why should you care? Because what we've got right now is this, if you would, like positive feedback loop, okay? And the option expiration, better known as OpEx, could actually shake us loose of just that. And, you might see some rumblings of that, okay, into today's close, which is only 10 minutes away, right? But bottom line, you might see some rumblings of that. But if there's going to be some degrees of volatility, it's going to come early next week. Again, you're kind of dislocating, if you will, a huge amount of gamma risk that trading firms, again, have traded against and causing these, these feedback loops, if you will. So definitely something to think of because, again, this is unequivocally, it is the largest option expiration, okay, on the books ever. And it's fun though because like it doesn't feel like it. And just like looking at the overall volume inside of the S&Ps over here, again, it could change everything. At the same time, like we're barely doing like 1 million contracts. You got 10 minutes to go. Like yesterday was even more rocking than this. And I got to tell you, I definitely expected a little bit more though out of markets. But at the same time, I'm saying that I'm like, wait a second, maybe we are actually seeing the beginnings of it. Okay, because yeah, Nvidia is down, and I said yada yada yada, but Nvidia, right, has been the marketplace. And if you start looking at it in terms of auto expected moves, okay, Nvidia is actually going to close the lower edge of its expected move. You're going to look at Meta, and you're going to find that Meta, okay, where is Meta going to close? It too, lower edge of the expected move. But I got to tell you, you saw a capital rotation. The capital rotation saved the day. You actually see Microsoft bid, okay? Apple right now, Apple towards the lower edge of the expected move, but Amazon, okay, upper edge of the expected move. Google, upper edge of the expected move. I mean, look, people, it took Microsoft, it took Amazon, it took Google all hitting the upper edge of the expected move, okay, to offset, okay, the hit that Nvidia is actually taking. Look, Microsoft, Google, Amazon kind of filled the hole. They filled the hole that Nvidia and Meta kind of left in this marketplace. So as I said, there's heavy, heavy capital rotations. Some of the aspects that I'm also seeing in here, take a look at like the energy sector. And you're looking at this and you're thinking like no one has wanted to touch the energy sector now for what? I don't know, months. There's a bid back under it. So we're still seeing some fairly wild capital rotations, things like advanced decline line, okay? Positive advanced decline line, but the markets are still listlessly lower. Again, there is some very interesting capital rotations, but what we have to see, and again, I'm not done with some of the rotations over here, but what we have to see, okay, is higher degrees of correlation. right? We have to see higher degrees of correlation in the marketplace, and I'm going to come to that in just a moment. By the way, take a look at the financials here. The financials are going to close this week, okay, to the outside, the upper edge of the expected move and outside of it. So with just moments to go, again, maybe a little bit of volatility starting to hit this marketplace, okay, a bid back under here, but really, right, Nvidia might be showing the first and possibly short-term and only signs of any volatility in it. As I've said time and again, even if you're bullish in Nvidia right now, I think you have to see a degree of a pullback. But what is, again, and could change everything in this marketplace is this option expiration that removes, if you will, almost like this, the handcuffs of this constant and relentless positive feedback loop to the upside, right? So as I was saying, there are some products, as I said, the financials and the energy sector that ripped to the upside, Microsoft ripped to the upside, and Amazon ripping, and Google also ripping to the upside. It took all of that to offset what is a fairly mild hit inside of Nvidia. Now, okay, this is a little bit of the opinion piece for early next week. All right, I've been talking about this just incessantly, and that is the advanced decline line here. Okay, we've seen some pretty, as I said, wild capital rotations. One of them that's been playing out and fairly significant is in the Dow. And I'm actually going to bring up DJX in this particular case. The reason I'm bringing up the DJX is I want to show you, like, okay, here's the Dow. All right, DJX is just a tradable version of the Dow. There is huge sell side activity, a little bit of a bid. Okay, a week ago, nobody wants to touch it. And all of a sudden, huge movement to the upside in here. As I was saying, okay, you need to see some greater degrees of correlation that we're not seeing. And the reason I was going over to the advanced decline line is kind of a bit of a cautionary tale. There could be trading sessions coming up, and I've been reiterating this just week in and week out. Trading sessions coming up. You could have easily 80 to 90 advancers in the S&P 100. Again, I am looking at the S&P 100. Because quite frankly, look, there's only even 10 stocks anymore that matter. But you could see an incredible advanced decline line, like 80 over 20 or 90 over 10, okay? And that is the degree of correlation, except you could see 90 products up and the S&P is still effectively be down, okay? One of the things you got to be so careful of right now is with the even that mild selling going on inside of Nvidia. The problem is we're seeing rotation. So as Nvidia is seeing some sell side activity, okay, we're rotating. We're rotating to Microsoft. We're rotating Amazon. We're rotating Google. We're saving the markets. We're rotating a little bit to the financials and or the energy sector. And that's why I said the advanced decline line could correlate to the upside before a major sell-off, okay, would persist. It's something that, again, look for it. I was looking for it today, okay? Look for it early next week. And I'm telling you right now that a very positive advanced decline line could indicate capital rotations that are about to be coming to the downside. So for the most part, what I'm actually indicating is Nvidia starts to take a little bit of a hit, right? Okay, so Nvidia starts to take a bit of a hit. The rest of the market is actually propping it up with 90 advancers. So you see the marketplace, the S&Ps, right? We'll call this the S&P 500 kind of skirting through the middle. The advanced decline line peaks, Nvidia starts to take a little bit of a hit, pulls down the rest of the marketplace. Then we start to see a flush where we actually see everything to start to sell off, okay, in accordance with Nvidia. And that is something, again, that's the way I'm looking at markets right now. If we're going to see some sell side activity, the higher degrees of correlation could actually come initially to the upside. Kind of a wild thought out there. All right. By the way, yeah, you know what? Maybe this OPEX is not disappointing. Some little bits about some volatility starting to hit the marketplace as volume starts to surge. Again, the volume is surging here in the S&Ps and is unusual because everybody knows how much risk is coming off the books, okay, in some of the equity products over here, destabilizing, well, a lot. Take a look at some of the destabilizing trade in just the last couple of moments here as we come into the closing bell. Of course, on this Friday, OPEX Again, 5.5 trillion coming off. I assume that probably 3 trillion of that was the SPX, but some heavy size coming off the books after, and into the close today. And of course, thereafter, early next week, might see some bouts of volatility. All right, changing gears a little bit as we come into this closing bell. I see some opportunities in GLD, okay, and in TLT. The opportunity inside of GLD, I'll just make it very clear, put on a bullish trade today inside of gold, okay? This is, I used an in-out spread. The reason I did it, gold, even though it's getting whacked back today, right? Gold is still in a decent trend to the upside just in the last few weeks, even with incredible strength inside of the dollar. So lo and behold, I think it's actually a great time to get long gold in terms, though, of a spread. And I'm using a defined risk spread in there. The other one that I see that could be beneficial right now would be the TLT. As the TLT, look, you can talk about direction until you're blue in the face. Obviously, okay, this TLT has been to the upside, right? I see, though, nothing but scattered, broken volatility in here. Again, a nice subject, if you will, for the possibility of a bearish, okay, in-out spread coming up inside of TLT. This kind of volatility inside of the bond market, I'm not going to let that go unnoticed. I'm definitely going to enter into a position in this. And there's the closing bell. So I'm definitely going to enter into a position in TLT early on, of course, in next week. All right, last but not least, all right, looking at overall volatility of the marketplace. You look at the VIX, it's not much. You look at the bond market, as I was saying, bond market throwing off quite a bit of volatility in here. But what I look at the most, unequivocally, is this week-to-week, the SPX. So we just came off this 4-day holiday trading week. As I said a moment ago, it had about a $65 expected move. So this past week, $65 expected move. Now, what are we anticipating moving forward? And I have to tell you, I looked at this just about 15 minutes ago, and I was a little bit taken back by this. If you take a look at the SPX, you go out 7 days, okay? Go out 7 days. And of course, I know we're between, this June 19th kind of holiday trading week, and then, this next week is a full week, and then we're kind of wedged again in a holiday trading week, which is going to be July 4th. But the next 7 days, it surprised me. We're only looking at about a $62 expected move. And people, there's actually some fairly big economic data that will be out next week. You look out to like next Friday, okay? There's some monthly GDP, a little PCE, Chicago PMI, all right, side order or jobless claims. Like, this is the makings, in my opinion, of some volatility. So once again, I am looking, okay, at next week's expected move. And next week's expected move is not even determined, okay, fully yet. It's somewhere around $62. And I'm telling you right now, we're going to move every ounce of that and then some. Look for volatility to kind of pick up early on in the trading week, as I said. Okay, we just came off a 5.5 trillion OPX, and that really could dislocate, change everything. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.